For more now on the BRIC countries and what to expect from the summit, we're joined in the studio by Shanat Patel, Global Market Strategist at Liberum Capital. Good morning to you. We're just talking this morning about the new reserve currency. It seemed like it wasn't going to be on the agenda, but we've had Russia and China talking about it for weeks, if not months, so it seemed unlikely it wouldn't be mentioned. Well, it now takes centre stage.
Well, I think what they're trying to do is effectively move away from the issue that they've got themselves, which is this vast amount of foreign exchange reserves, predominantly denominated in dollars. They're seeing that the trade between their own economies has increased significantly. Effectively, you've got a huge consumer of commodities being China. You have a huge producer of commodities being Russia. So effectively, over time, why bother going through the dollar? Now, the only problem you have in both those countries is that you don't have full convertibility yet. So effectively, we're still some way away from a situation where they're going to freely trade rubles and yuan together. And I think there will have to still be an intermediate currency in the middle. Now, in the past, they've said it's the euro, could be the dollar. But effectively, I think what we're seeing right now is that the interlinkages between the BRIC economies are basically going to increase as you have consumers in Asia of commodities and producers out of the other two.
Investors markets closely watching the BRIC summit. What, in fact, should they indeed hone in on? What language should investors really pick up out of this summit?
I think really it's going to be interesting to see how the leaders meld together in terms of what further can be done in terms of trade. I think shifts in terms of the FX reserves are going to be relatively slow. People have said very recently that actually there's no substitute for the dollar right now. And that's the major issue, is that you could put it into euros, but effectively what they want to get to is actually forget about the dollar, forget about the euro. We want to have effectively full convertibility of our own currencies and have swap agreements where you will see the likes of the Chinese taking on board huge amounts of oil reserves, etc., in a swap agreement with the Russians, who will then take their money in the other direction, so all goods. So effectively we are going to see increasing trade linkages between the two.
Market doesn't care about this one hoot, does it? I mean, and that's what the dollar-ruble quote told us there, that the dollar's firming actually against the background of all this noise that's coming out of Russia. And it's not quite clear what at this point Medvedev is actually saying, because there are contradictory lines in this statement. The world doesn't need currency turbulence, but we do need a basket for the SDR drawing rights that don't have so much dollar in them. Well, let's just have a quick look at gold if we can and pop that up, because gold is mentioned here and maybe that gives us some indication of what market sentiment is. But it seems that the market is blithely ignoring this call for some kind of lower dependence on the dollar.
It's very straightforward. If they really want to move the dollar, they'll start selling the dollars. I mean, effectively, the Chinese plus the Russians probably have a cumulative of about $2.4 trillion. That's a lot of dollars which they could easily sell. But again, they don't really have a viable alternative right now, and that's their situation. They could start buying gold, but they'll just cause the gold price to spike, and effectively the gold price is trading in dollars anyway. So I think that it really is, you're correct, right here and right now, it's not that important. And really what is more important probably is what they think in terms of policy, because as a bloc, don't forget, the BRIC are becoming exceptionally powerful right now. They are the delta for world economic growth, and that is hugely important for a global economy which doesn't have any growth.
Well, we spent so much time talking about who's going to be dominant at this BRIC summit, whether it's going to be Russia or China, but are we overlooking Brazil? And you just spent some time there, Mark. We do have a very charismatic president who's also been embraced by Obama. How much say will he have at this summit?
Well, I think it's very interesting, because Russia is actually the weakest of the four economies by quite a large, I think, step. Brazil, for example, has not had any sort of financial problems in its capital markets, and I think actually Brazil is in pretty good shape. Okay, its GDP's off in 2009, but the forecasts actually look quite good going forward. You've got companies like Petrobras there, you've got the ethanol base, you've got agricultural exports. So I think the Brazilian economy is in good shape. Lula is a very well-respected global statesman now. So I think Brazil absolutely can be one of the key players. I think the Russians are on the back foot simply because what they have failed to do is use the last oil and gas sort of price spikes to essentially diversify their global economy. And so they are still struggling, I think, with the fallback and the dependency on oil and gas. I was going to say, Shanat, in terms of this BRICS summit, isn't it really all about politics rather than economics? Because this is all about posturing, and this is all about saying we're important on the global stage. And isn't it really all about saying we actually do have a lot of muscle and we want some critical influence, particularly in things like the future of the IMF, Copenhagen?
Effectively, that is true. I mean, I think the problem is the world has been very slow to recognise that they are a powerful influence. And as a grouping together, they become even more powerful. I mean, if we look at the stimulus packages which have been announced and the effect on GDP growth in China, even in India, yes, I agree with you, Russia is the weakest out of those because it is a single good economy. But effectively, this group are probably going to be the leaders of economic growth going forward, and therefore need to be heard. And I think the problem they've got is that they haven't been heard on the stage. And I think to some extent even investors have been very sceptical about how far they can lead their own economies themselves. And effectively, a lot of people have over the last 6 months have said, Chinese stimulus package won't work without the US consumer coming back.
So the follow-up question to that is, are we in the West ready to hear them? Because I think there's one thing for them to come together, but the question I think is whether we're really whether we're ready to hear them.
The answer probably right now is no, but in the investing community, you better listen, otherwise you're going to miss out on these big rallies.
Thanks so much for stopping by this morning. Shanat Patel, Global Market Strategist at Liberum Capital. Becky.
JP Morgan seems to be much more upbeat about what's going on in the European construction, European property sector, rather, upgrading their ratings on a couple of these companies and upgrading their price targets and several more. The biggest beneficiaries appear to be British Land and Hammerson, which according to JP Morgan now both have an overweight rating on each of those, so watch out for those stocks at the open. Also increasing their price targets on several more, the likes of Land Securities, Prologis European Properties, Derwent London and Big Yellow. So some of these European property companies do appear to have some value, according to JP Morgan. A couple of price target cuts, though, coming for Great Portland Estates and Shaftesbury, for instance. But the big winners there appear to be British Land and also Hammerson, worth watching at the open. What do you make of the European property companies at this stage? Do you think we've come through enough of this downside that there is some value still left in the sector?
I think the property market is very difficult at the moment because I think domestic houses still got some way to go. I think commercial property, as we all see, companies are struggling at the moment, thinking very carefully about any expansion moves. So I think it's going to be a sector which is reasonably fragile for some time going forward.
Probably not helped by sentiment too from the States. Did you see the story kicking around the Manhattan and the Hamptons could be the next bubble to burst, which is right in the hub of the financial centre? That can't be good for sentiment.
No, I think, well, one of the problems that I think we've got, particularly in the financial markets, is that certainly I think London has been somewhat overweighted towards the financial sort of sector. And as you get some element of retrenchment with the downturn, that basically has knock-on effects with the overall economy.
Leonardo DiCaprio only managed to get $8 million for his Malibu home.
Oh, it's going to have to make another film.
Apparently went on the market about $10 million. But he only paid $6.5 for it in 2007.
He lives in his trailer anyway half the time on set, doesn't he?
I don't know.
How did he manage to get 1.5, given the house market peaked in 2007? He did pretty well.
Yeah, I think he did pretty well as well. The construction story is an interesting one, and Shanat, we haven't released you, so you're still sat here. But I'd like to just pull you back in to the conversation for a second here, because as we've seen this decline in activity in the construction market in Europe, the United States and other parts of the world, we're asking ourselves what the replacement activity is going to be in infrastructure in the developing world. And a lot of investors in the West have put money into infrastructure funds on a lot of hope that this is actually going to happen. Just bring us up to date on whether this is a play that is starting to bring benefits, because it seems to me the payoff is still not here.
Yeah, it used to be a saying it was the jam tomorrow. It's lucky that tomorrow's arriving quite quickly, and the reason behind that is you've got these multiple stimulus packages. I mean, we look at cement demand and production, and in China it's going through the roof, and on top of that, China's 50% of global cement demand anyway. And in India, you've got significant stimulus, plus the fact that interest rates in these economies have collapsed, essentially. And, going into the credit crunch, a lot of these economies were on credit controls of very high real interest rates. Now they're negative, or credit controls has disappeared. I mean, if you look at China, the stimulus package, the big headline numbers are great, but the fact of the matter is bank lending was $750 billion in the first half.
So you think you still chase the infrastructure? In a word?
Yes, basically.
Shanat, thank you very much. Shanat Patel.